I'm here with another dividend talk video. All right. One of the things I like to do is do research at least once a quarter of any possible quality dividend stocks that I can add to my portfolio. So far this year, there were four that I have brought to the channel: JM Smucker, Prudential. Then it was Enbridge and Eversource Energy. Currently, Eversource Energy and Enbridge I do have in the portfolio. JM Smucker and Prudential, those are two that I have on my watch list that hopefully I will be able to add positions this year. But in this video, I want to talk about another um, company, another stock that I have been eyeing that I think would be a great addition to my portfolio, not only because of the great quarterly dividend, but also because of the sector that it is in, and in my opinion, is potential for capital appreciation. All right. So first, just as a quick check in, I currently have $12,076.37 paid to me annually. On average, that's a little bit over $1,000 a month. All right. So this particular stock is Accenture. All right. This is a company that does technology, cloud, cybersecurity, digital transformation consulting. All right. Their clients serves highly across financial services, healthcare, communications, and public sector. The thing I really, really like about this company as well, because AI is such a emphasis that is being put on it, and the technology and the tools, they're doing a very big pivot, including that into their offerings, working with, OpenAI and Microsoft. And I think that is very, very important because a lot of the clientele that they work with, that clientele will not have the dollars that an Amazon or a Google has. So them still being able to provide certain tools that they can use from a healthcare perspective for that healthcare company or that financial institution is still going to allow them to be efficient from a technological standpoint, but it also allows Accenture to be continued partnership with them for their technological solutions. And I like that a lot. All right. The market capitalization is really, really good. The dividend yield as well at 4.76%. The next thing that I like a lot is the dividend paid each quarter and how long they've been paying it. So currently, the quarterly payout is $1.63 per share each year, all right, each quarter. And that breaks out to $6.52 per share. That would right away, adding that to my portfolio, would put it probably in the top 3 or 4 of my dividend payers, which I like a lot. And then they just recently did a 10% increase. All right. Now, this is the key, right? They're not yet a dividend aristocrat stock, but when I pay attention to their growth streak, all right, according to tracking data on Market Beat, Accenture has reliably grown its dividend distributions for 20 consecutive years. All right. So that means that, to me, that shows me that management has made it a priority to do investments back to their shareholders, right, in the form of dividends. And that is something as an income investor that I want to pay attention to a lot. All right. And then another thing I like to do is look at the dividend rating and the safety of it, right? So right now they 8 out of 10, which is very, very good. They have a very strong cash flow. I mean, they only pay out 31% of its free cash flow for its dividends, which leaves a 69% cash buffer, which is very, very good because when you're talking about technological solutions and just technology as a whole, that gives that company the opportunity to expand, expand the offerings that they're going to offer their stakeholders. So that was something that really stuck out to me, that they could still pay that massive dividend, but also have enough free cash flow that they can use for expansion and not have to get into any heavy debt. All right. They have a healthy earnings payout, which sits comfortably at 52%. They have an impeccable balance sheet, which I also think is very, very good. Now, the thing that I'm also looking at with this company when it comes to being able to grow the capital appreciation, which is growing my net worth. A company like this, like I said earlier, they have the opportunity to, because they're in a technology field, that they have growth potential, right? Like just this year, their high in the last 52 weeks was $307, and their low was 118. So right now, with it being at $142.37, to me, at that range between 140 or less, my max is about 150. With that $1.63 dividend, I would definitely get shares into that position. All right. So I'm looking to probably enter this position sometime this quarter or maybe early quarter, as long as the prices stay around this range. All right. Now, once again, this is not financial advice. This is just my personal opinion. Do your own due diligence before you make any financial decisions. If you have any questions, any comments, leave them below. And as always, I'll definitely get back to you and answer them.